right. Little mic check. Mic check, mic check. Make sure everything's running smooth. Starting in 2 minutes. 2 minutes, baby. Check. Mic check, mic check. All right, there we go. All right, guys, 1 minute. Uno más. El momento, por favor. What is going on, ladies and gentlemen? I am pumped for another Bull Bear Brief episode. We're going to go through the indexes, the SPY, the S&P 500, the Dow Jones Industrial. We'll hit up the small caps. We'll hit up the QQQs, and we're going to take a look at Bitcoin today. We have a few things that we're going to talk about when it comes to Bitcoin tonight, and little pieces of news, we're going to dive a little deep into Bitcoin. We won't spend too much time on it, though, obviously, because this is the Bull Bear Brief. Thank you guys so much for joining me. My name is Dave. This is your first time here. Hit that like, hit that subscribe button at any time. I'm not telling you to do it now, but if you find any entertainment or you find this valuable to you, your trading, your knowledge at all, please subscribe and hit that like button. We're going to jump right into it, guys. Right now we got Yosef and Jimmy Bright in the building already. What's going on? And of course, Dan Bob Dan, the greatest moderator alive. I got my Go Blue shirt on. Let's go blue. All right. So first and foremost, the S&P 500, you guys know just as well as I do. And it sucks. It sucks to be a momentum trader right now. Why? Because it's going to be slow. It's going to be boring. And people are going to wonder, well, you're not trading? No, I'm not. No, I'm not trading. Because I tried to trade in this, right? There was no setups and I was trying to trade. I lost some money. I learned my lesson. I don't trade unless we are above the red 21-day moving average. It's that simple. There is no reason to trade for me because my tested and proven strategy of trend and base breakouts for a momentum trader happens above the 21-day moving average. That doesn't mean you can't trade. That doesn't mean your mama can't trade. Maybe she's got the proven strategy that she has that she needs to make it work. Me, on the other hand, I need it to be above a 21-day moving average. All right? So that's just me. S&P 500 just trying to hold above a 50-day moving average now. If it breaks below this 50, anytime I've seen it break below a 50, all hell breaks loose. We talked about this bloody 6-day sell-off. After we broke the 50, all hell broke loose. When we broke the 50 here, look what happened. Now, this, of course, has to do with the Japanese carry trade, but when you start to see unwind happening, this is what happens. If we don't hold this 50-day moving average, to me, that's really the line in the sand. I'm risk off at the 21, but this right here, when we start breaking the 50, I start losing hope. I really do. Now, it always pays to be positive in the market, and I always believe that it'll head right back up. I think this might just be a temporary pullback. Of course, you can see we get these quite often. What's going on, Erica? Good to see you. So, temporary pullback, or is this the aggression recession? Are we going to see a bigger pullback? Well, I am coming out with a video tomorrow that will dive a little bit deeper into the September effect. And that is a very interesting little 3-minute podcast clip on the September effect. And the September effect is real, guys. The September effect is real. It's almost like the market gets that seasonal depression, right? It starts seeing all the leaves fall off the tree, and there's a little bit of melancholy in the air. That cold air starts to slow down the overall market. What's up, Robert? Robert Tainch, what's going on? It's good to see you. Zamora is in the building. Let's do this, guys. Next up, we're going to take a look at the IWM. So the IWM, this is small caps. Okay, we were talking quite a bit about that great rotation. We've seen it start to happen here. I seen a breakthrough on this trend on a rising 10-day moving average, and then this happened, right? Now guess what? We're below the 50-day moving average once again. So not looking too good, not looking too hot there, and we're not going to spend too much time looking at all this. As you can see, tech is leading the way down. We're well below a 50-day moving average. We're not holding, well, this anchored VWAP off this bottom is trying to hold. But as you can see on this daily, we're getting a bunch of wicks off the top. So there's big sellers selling into this area right here. What's up, Predator? Good to see you, brother. So I want to take a look at Bitcoin because we're going to be talking a little bit about Bitcoin in a little bit. I got a couple of news articles that I found pretty interesting. Now, guys, if you really take a look at this, if we use these moving averages, we can see Bitcoin's really hurting, right? It's below all of its moving averages. If it breaks this 50,000, I really think it can pull much further back, okay? But if we look at Bitcoin overall, I mean, look at this. Like, it's 10,000 from its previous all-time highs, right? But it made new all-time highs. And now instead of just dropping off the face of the earth, this thing is slowly popping up and down, up and down. So it's kind of just trading sideways here. But I think this 50,000, I think this is really a really true area. Like this could be the bottom in my opinion. These aren't buyer style recommendations by any chance, but I want you guys to understand where Bitcoin sits while we talk about Bitcoin so we can have a better understanding, okay? But I truly believe if we break 50,000, we could head much, much lower before finding a new bottom. But I feel like that this is the bottom, and this might be a hedge against our dollar completely getting decimated lately, okay? All right, so that is your overall market. S&P 500 below a 21-day moving average, trying to hold the 50-day moving average. The IWM below a 50-day moving average. So the small cap stocks are really getting hurt. But what's getting hurt the most is tech. Tech led us up for the past 2 years, and now it looks like it just cannot hang on to these gains. Now, everything can change tomorrow. We could just get a huge gap up overnight and get all-time new highs. We definitely can do that. There is nothing outside what the S&P 500 can do to surprise us. But as of right now, I am personally risk off because I'm a momentum trader, so I am risk off. And I've been staying true to that. Like I told you guys before, if you're risk off and you feel that need to start pressing buttons and you just absolutely have to, you have to understand risk management in this situation. If you want to be a part of the market, you need to be in there, but you need to be very, very, very small. One share, you know. I personally would say not even allowing yourself to do it, not being an enabler. You know, if you have a proven, tested strategy, why go outside? Why shit in the neighbor's mailbox, right? All right, guys, let's bring up what we got going on. So I was just going to read a little bit about this because I always give my analysis, but it's always nice to have an outside biasy come in and kind of give us an understanding of what they think, right? So this is news from Yahoo Finance. We like to take Yahoo Finance right off of here just because they have a lot of good analysis that are talking. Now, these aren't all just to live by the book. These are another person's opinions. Just like these are my opinions, they're not yours, right? I don't want anybody in here becoming spoon-fed. I want you to understand and learn yourself, right? We all need to learn and understand and take it all in and create your own opinions about it. If our ideas line up, that's great. If they don't, I want to hear about it in the chat so that way we can talk about it a little bit more. I'm not going to try and prove you wrong, but arguing and articulating on the subject is only going to make us better. So signs of a cooling labor market last month pushed a major U.S. stock averages lower on Thursday ahead of the highly anticipated August jobs report set for the release on Friday. The private sector job creation came at 99,000 for August, according to ADP data, marking the slowest pace of growth since January 2021 and missing the forecast of 140,000. And as you guys know, when we hold interest rates at a higher rate, a lot of people are going to have a hard time borrowing money, right? That's just obvious. It's harder to borrow money when it's more expensive to borrow that money. You can't afford it. So the higher they hold those businesses, big businesses especially, the ones that don't own their estate, they're paying on these mortgages, right? They're paying on all their borrowed money for all their growth assets. And the longer they pay these, the harder it is for them to stay alive. What's the first thing that they do when they start cutting? They don't say, oh, well, we got to slow down our research or we got to slow down our business. No, they say cut jobs, right? So when it comes to creating new jobs, that's going to be even more hard, right? So if we're losing jobs, more people are filing for unemployment and it's slowly growing, which it should at this point, right? That's why we're getting ready to cut. This all just makes sense, right? We're slowing at a pace since 2021. A stronger than expected service sector activity sentiment for August offered some relief to broader recession concerns, but employment sub-bindex bolsters hints of the ongoing cooling in the labor market. So we've talked about this quite a bit. I'm not going to dive too far deep into this, but there's obviously huge sentiment behind the overall labor market, and it's starting to come down. And this is a big fear of your boy Jerome Powell, which we have right here. We're talking about a supersized Fed rate cut, and that's going to be our next topic here, because everybody knows in September at some point in time, the 18th to be specific, not some point in time, but on the 18th, you can see we have a probability of 59% that we're going to get a quarter of a basis cut. Now we are up to a 41% that we might get a half of a cut. This is going to go on about why a larger cut, like a half a cut, might spook the financial market. So that's what we're going to read about, but I just want to make sure that we keep up on the stream. We are all set and ready to rumble. A deeper interest rate cut from the Federal Reserve this month could spook financial markets and send the wrong message about the immense risk of recession, according to one economist. It comes to policymakers and the U.S. Central Bank are widely expected to start lowering interest rates when they meet on September 18th. George, chief economics for Mazars, told CNBC on Thursday that while no one can guarantee the scale of the Fed's rate cut at its forthcoming meeting, he is firmly in the camp calling for a quarter point reduction. A deeper interest rate cut from the Federal Reserve this month could spook financial markets and send the wrong message about an immense risk of recession, according to one economist. It comes as policymakers as the U.S. Central Bank are widely expected to start lowering interest rates when they meet on September 18th, with investors closely monitoring the economic data for clues on just how big a rate move they are likely to deliver. The chief economist told CNBC on Thursday that while no one can guarantee the scale of the Fed's rate cut at the forthcoming meeting, he is firmly in the camp of, we just read that, I don't see the urgency for a 50 basis points, he says. The 50 basis points cut send a wrong message to the market and the economy. It might send a message of urgency. And I've talked to you guys about that before. We want to see rates get cut, because if rates get cut, that's going to be a great sign. People can start, and even when they do get cut, it's still expensive, right? Compared to what we're used to, right? When we were getting interest rates as low as 3%. Right? So even if it comes down from 5 to 475 or down to 450, that's still high. That's still hard to borrow, right? And so what he's saying is, even though we might need that 50, if we give that 50 or he gives that 50, it might scare a lot of people. They might say, oh, wow, well, if he's got to cut 50 basis points after he's been saying he's going to cut a quarter of a basis point, and now he's going to cut 50, there's trouble in the market. There's trouble and trepidation ahead, and we are headed for a recession. And that might really spook the markets there. So if he does that, obviously he's like admitting to everybody that, wait, maybe we haven't hit a soft landing. We might have some jerks going on here, like a jerk on the chain in the economy. And now we got to cut quicker before we have a bigger, broader impact in the labor market. So how big will it be? Well, it even says here between 5.25 and 5.5. The benchmark borrowing rate, which influences the bulk of other rates consumers pay, is currently targeted between 5.25 and 5.5, right? That's where we're at right now. And it's going to be cut between 25 basis point. We are more likely to cut at 25 basis points rather than the 50. But we will see. We will see very, very soon what exactly happens. As you guys can see here, we have a 60% chance and a 40% chance. So it's 60-40 here. I like those odds. We'll see if he surprises the market. I mean, this is why I'm hands off right now, guys. If we're below a 21-day moving average, the market's not trending to the north side. Okay. So a supersized Fed rate cut at 50 might not be good. One thing that I found really interesting, actually, Dan Bob sent this to me. I thought this was really, really interesting, guys. China creates a $230 billion brokerage to take on Wall Street. Okay, so Wall Street's doing their thing. They're making big money. Now China wants a piece of that action. So I thought it was kind of cool because we're always in big competition with China, right? No matter what it is, space race or they're being the biggest retail. I mean, I think they got us beat on there, but China is combining two of its largest state-backed brokerage to create a new behemoth as it seeks to consolidate the $1.7 trillion sector and build stronger investment banks to compete with overseas financial firms. I'm not going to try and read that name, but the securities company will merge with smaller rival Hi-Atago Securities through a share swap, according to statements from both companies on Thursday. The combination of the firms, both party owned by Shanghai State Asset Administrator, will create a new entity with assets of 1.6 trillion yen, 230 billion, topping CITIC Securities as the largest brokerage. The merger is pending approval from the company's board and shareholders, as well as the regulatory authorities. The deal comes a year after President Jinping urged regulators at the finance conference to cultivate a few top-ranked investment banks to compete with Wall Street firms expanding in China. The nation's security watchdog has also voiced its support consolidation, with a goal of having 2 to 3 investment banks that can be completely global by 2035. China had about 145 security firms at the end of 2023, with combined assets of 11.8 trillion yuan, according to the official date. The combination is conducive to building a first-class investment bank and promoting the high-quality development of the industry, according to the statements. So they are really trying to compete. They're bringing all their assets, I wouldn't say all their assets, but some of their biggest assets together, so they're able to really size up there. It takes money to make money. Just reading on here, just seeing if make sure we have everything. The merger will potentially resolve Hayatog's business concerns. The security said in a report, the overall quality of the underlying asset is not very healthy, which also leads to low valuation. So there is always that. I just think it's funny, China's always doing something out there. But check this out, guys. So we have, our Apples and our Nvidias, we have our tech industries that have become these huge behemoths. We can look at the stock map here, trillion-dollar companies, Apple, Nvidia, Microsoft, Google, Meta, Berkshire Hathaway just recently, but now they are saying that LLY or EY Lilly could soon become the first trillion-dollar healthcare stock. I almost lost my phone there. Let's see what we got. So here's LLY, EY Lilly, LY Lilly. Why is it riding and soaring demand for its injectable weight loss drug Zepbound and diabetes medication Mounjaro? I think I'm saying that right, which is incretin drug that mimics hormones produced to the gut to tamp down appetite and regulate blood sugar. And if you guys don't remember, the biggest catalysts recently have all been in weight loss. That was about a month ago, 2 months ago, even as far back as 6 months ago. If you had a weight loss drug that could compete or a weight loss drug that was out there, your stock was soaring. It was absolutely incredible to see just in the headlines. If you had any type of weight loss out there, the market was just going. So if you were a small cap stock and you said we came out with a weight loss drug or we have a clinical study or FDA approval waiting, people were just getting so excited and investing a ton of money into that. And so now Eli Lilly is on that frontier for the injectable weight loss drugs that bound diabetes medication Mounjaro, and which is really cool. You know, it just tamps down the appetite and regulates your blood sugar. It accounts for almost 40% of Eli Lilly's total sales, according to its second quarter results in August. Wow. The company is one of two dominant players in the weight loss drug market, which some analysts believe could be worth $150 billion by the end of the decade. Eli Lilly may also be pulling ahead of its main rival, Novo Nordisk, as it shows progression during expanding supply of its drugs. So let's take a look at LLY here. Let's take a little peeky gander, shall we? LLY. And I remember back here when they were actually breaking out. I did not take any shares because it's a slower mover, but this thing really took off, came right back down, retested this area, went right back up. Now it's creating a base up here right around that $1,000. Looks like the base is at 968, and now we're having a hefty pullback. But obviously, we know that the healthcare sector, XLV, has been doing really, really well. It looks like LLY is a leader in the healthcare sector, but it has created this new top here. So if this thing can break out from this area, that would be really nice. Obviously, when you have I don't want to call it a one-trick pony, but it's saying that, you know, most of its gains are coming from this drug here, 40%. What happens when you get too many competitors or rivals that come out with something similar? You know, you're going to start losing money in your stock and stuff. So will it get to the $1 trillion market cap? That's the question. Let's see where they're at right now. They're at 867 billion, so they still got a little ways to go. But if this thing continues to take off and they continue to ramp up production, they might actually be there. Predator said, most investors I personally know each have a horror story about investing in China's equities, and it always ends with their quick rise and falls. You know, there are a lot of stocks that we can look at, and Baba's being one of them. You know, Baba, anybody invested in Baba at any good time, you're pretty much down money. You know, look at this thing. This was an absolute giant, and it's still lingering down here at its absolute lows. And then you have like PDD. PDD, man, I tell you, I was following PDD for the longest time down here. Regretted not taking some of these shares down here. But again, like you were saying, look at this huge fall off. I mean, it just completely tanked. You know, you could have been in at any time in the past 4 months, 5, 6 months even, and now you've lost your investments just with one earnings, you know. The thing with China is they can do whatever the hell they want. It's not like, you know, well, here there's really ways around everything too, but China can come in and just take over your business and completely shut everything down or shut the whole economy down over there. And it's terrifying because why invest in something that you really have no understanding over or any authority over? I don't know. But I totally agree with you. I totally agree with you. There's no real point in investing in China when America's numbers show. But if you're a momentum trader, there are reasons to get into some of these momentum stocks as long as you use proper risk management and know that when you're trading a biotech or a Chinese POS, there are inherent risks. So we'll keep that in mind as well. The next up, we're going to talk about the EVs. Now, if you guys want, we'll just take a quick look at Tesla because we know Uncle Tesla. Oh, and look at Uncle Tesla. A nice pop here with the overall market down. It looks like it's holding above all of its moving averages. Of course, its RS rating is down to 77, but it's still moving around 4.4% of its average daily range. I'd like to see it get above these downtrends here These are not looking so good. But after that pop, what a nice little pop there. I really like that. So the most recent one says EV subsidies was hurt by Trump. Former exec says to urge Trump was anything but a disaster. It's historical fiction. Okay, we're not going to get into that nitty gritty. But I do have a story about the Chargers. And as you guys know, there's been plenty of Charger stocks out there, and none of them really have done a whole lot of good. At least I can't think of one stock, and you guys can correct me if I'm wrong. I can't think of one EV charging stock that's out there that really, took a hold. I know that Tesla has their own, and they've been installing them, at like Myers, and there's lots of different place ports for Tesla chargers, and you can get your at-home Tesla charger, things like that. But in a report, the White House released new figures on the build out of the nation's EV charging network, a small positive development in what typically a sore spot for EV adoption. In its third quarter update, the Joint Office of Energy and Transportation revealed over 192,000 publicly available Level 2 or DC charging ports in the U.S., an increase of approximately 9,000 ports from Q2, though down from 13,000 ports added in Q2. The nation's charging infrastructure only includes mostly privately owned networks through the National Electric Vehicle Infrastructure, or NEVI program, is funding this build out, as well as state incentives to increase publicly owned chargers. President JB has put tremendous political capital into the EV transformation of the U.S., and part of that is $7.5 billion build out of the nation's EV charging infrastructure. Through the use of public and private funding, the White House has targeted over 500,000 new chargers by the end of the decade via the NEVI program. The Joint Office of Energy and Transportation said the size of the nation's charging network has doubled since the start of Biden and Harris administration. In March, the White House took some heat when revealed only 7 publicly funded charging stations had built, with 38 ports available for charging since the program began in 2021. The White House countered that it took time with the project to get it right, and that the build-out would speed up by 2024. Currently, there are 69 NEVI-funded public charging ports in operation across 17 stations in 8 states, more than twice as many as operational NEVI ports as last quarter. A total of 40 states, blah, blah, blah. I don't think I'm going to continue reading this. They're throwing a lot of numbers at us. I don't care so much for that. Of course, it's telling us that it's increasing, it's increasing, it's increasing. Expert believe delays is also down to the state and local governments who dispute NEVI funding have little to no experience building out infrastructure. So they're saying, it's just not happening fast enough. It's happening, but it's not happening fast enough. So you're always going to have naysayers. You're going to have people say, this is not happening fast enough, But at the same time, I really feel like a lot of people are going for the hybrid answer to everything, where you have your charger, you have your electric and your gas hybrids. A lot of these newer ones that are coming out, which I thought were really cool, are coming out where you're using electric until you hit like 50 miles an hour or 45 miles an hour, and then it swaps over to gas, which I thought that was pretty cool as well. So just something to keep in mind. Dan Bob was talking about the last one. He says Chinese companies are allowed to scam foreigners. Yeah, that's very true. Yeah, the government doesn't care. They don't give a shit. It's funny to me that China's allowed to just scam. They just turn their blind eye to it. Russia too. Russia's the same way. Now, if we reach out and say, hey, they've committed these crimes, you have to turn them over. I don't know how that whole process goes, but I know we have taken into custody some of those hackers. So as we were talking about the infrastructure, the EV charging network, what I think is really funny is that we hear a lot of people talking about America's infrastructure, right? They're at how it's like so weak, and we need to upgrade this infrastructure, but yet we're going to EVs and the EV charging stations. We need more. It's just, and then obviously AI and the power it takes for AI. And I don't know what we're going to do, guys, but we're really going to have to start ramping up really soon our power production and our power grid, our stations. So, if all of this is coming into fruition, when is energy going to get a big kick? I thought nuclear energy there for a minute was starting to get really popular because NNE came online. There was a few other stocks that really started popping off. And then with not getting any energy from a lot of other places, we were going to have to really start ramping up production. Well, with that being said, that's just another idea. If we're going to need to redo this whole infrastructure, we might have something coming up very soon. I was going to read this, but I think we're going to pop over to the reasons why. Basically, this whole thing exists. So, few financial assets in history have shifted a wildly speculative asset to a potential reserve currency in such little time. Of course, we are talking about Bitcoin. Now, if you don't know about Bitcoin, we're going to read a little bit about it. This just kind of goes on to talking about why people are using this as a inflation hedge or as a hedge in any type of pullback. As we looked at Bitcoin, which we can just bring up right now one more time for you, you can see we are downtrending. But if you look at the overall historical, it looks very, very well still. It just looks like it's in its cyclical rotation after we created all-time new highs on Bitcoin. It looks like it's starting to pull back down. I don't know. What do you guys think about Bitcoin? If you have anything that you want to tell me about Bitcoin, throw it up in the chat for me. I'd love to hear your understandings of Bitcoin. Do you believe in Bitcoin? Do you believe it's the future? Do you believe it's a asset that we can value we can take into account? Can we take our money and use it as a hedge to inflation? Eventually, if our dollar crashes, are we going to be able to use Bitcoin? Will it be safe? So understanding Bitcoin as a store of value. Bitcoin, regularly called virtual gold, which I've heard it called many times that, shares numerous characteristics with traditional stores of currency like gold. The scarcity. Bitcoin supply is capped at 21 million cash, ensuring it cannot be arbitrarily inflated like fiat currencies. If you don't know what a fiat currency, it's where it doesn't have a standard. It just says, hey, this dollar is worth $1, and you believe it, I believe it, so we all agree upon it. It's not, we have this much gold, so that's why we're allowed to have this much money. No, we've gotten away from that, and almost, I want to say, all currencies out there are still fiat currencies. Nothing is backed by anything anymore. It's just you and I believing that your currency, this green piece of paper, is actually worth something. Where Bitcoin here, and I'm not trying to sell you guys on Bitcoin, I'm just trying to compare and contrast here. And if there's any thoughts or any feelings towards this that are against what we're reading or what I'm saying, let me know. I'd love to have opposite biases. So the supply is capped at $21 million cash. Nobody can just continually print Bitcoin. Nobody can just say, you know what? Well, we have inflation right now, or not inflation, but we have a pandemic. Let's just print a bunch of Bitcoin and then we'll fix it later. No, it's capped. It cannot go any higher. Durability. As a digital asset, Bitcoin is proof against bodily harm or decay, making it durable saver in comparison to bodily commodities. So it's saying that because it's a digital asset, that it's safer. It won't burn down. I mean, unless you have your Bitcoin in a cold storage and then your house burns down in that cold storage. I mean, technically, even though it's a digital asset, you still can lose that asset. So divisibility. Bitcoin can be divided into smaller devices, taking into account bendy transactions and investment throughout varying amounts of capital. Portability. Bitcoin can be stored and transferred electronically, permitting seamless transaction globally without the need of intermediary or physical delivery. So they're saying, if I want to send somebody a piece of Bitcoin, I think the smaller ones are like Satoshis or something. If I want to send you a portion of a Bitcoin, it can happen instantly. almost the speed of light. Almost the speed of light, I think it is. Bitcoin as a hedge against inflation. This is what we just talked about. Inflation, the slow of a boom in the well-known charge level of goods and offering, erodes the buying energy of a fiat currency over time, as we are seeing today. Bitcoin's fixed supply and the decentralized nature position is an ability hedge in opposition to inflationary pressures. So it goes on to talking about the limited supply, the accessibility, like globally, like this goes across the globe, guys. This isn't just you and I, and we go to China, we got to trade our money out so that way my money is worth this much now, and yada yada. No, it's globally. Everybody has Bitcoin. It's a global agreement that can't get changed or altered. The historical performance, this is why I wanted to show you guys this chart, is because of the historical performance. You need to know what it looks like, so that way you're not just blinded by this. Bitcoin does have these patterns where we move up really high and we fail. We move up kind of high, we fail, but each time we fail, we hold new higher lows. So you can see lows, higher lows, higher lows, higher lows. Where will this next higher low be? Like I'm saying, this $50,000 area, if it breaks through this, we can head much lower. We can head, I'm even thinking down to 25, 28,000 again. All right. So if it holds this area and creates a new higher low off this, maybe even a inverse head and shoulders on this, I think this can get back going again. And I think it can continue higher, especially with the financial their hands being in it now, and people being able to actually invest in Bitcoin for a long-term strategy. Okay. So that's the historical performance. The diversification benefits of Bitcoin in investment portfolios. So modern portfolio theory advocates for diversifying investments through asset classes to mitigate chances and enhance returns. Bitcoin's non-correlation with traditional asset trading consists of shares and bonds, offers diversification advantage. So if you guys haven't thought about it, there's many ways to diversify your portfolio. Digitally into a digital asset is now just another way to diversify. And there's plenty of other reasons in here. We don't want to stay too long on crypto. Obviously, this isn't like a crypto show or anything, but because these financial institutions can now budget you into an ETF by using your long-term investing, 401k, all that good stuff now. The last time that happened with gold, it took a little while, but gold just started slowly climbing higher and higher and higher. So I really think that Bitcoin, me personally, I think Bitcoin has a future, and we will see very soon if it does. Now, last but not least, we're going to talk about OpenAI. So OpenAI actually hit, and if you don't know what OpenAI is, it's ChatGPT. It's owned by Microsoft now, or if it's not owned by Microsoft, it's heavily influenced by Microsoft. So it's generative artificial intelligence startup backed by Microsoft. Said it hit 1 million paid users of its ChatGPT for business, according to Bloomberg. Now, if you guys don't know, that's where everybody tries to go with their business. Meta, the Meta Quest, Apple, everybody, when they come out with something new, if they can get it in the hands of business and business using it, that's where the big money is. It's not me and you using it, right? ChatGPT, for us using it, doesn't work out nearly as well as big business starts buying this. Because if big business is buying this, it's going to be huge for people to use this in their work areas. I use it constantly for work, right? I use it constantly for this too. We created a YouTube video just specifically using AI to help us discuss what's going on, right? We use AI for voice now. We use AI to read us things, to look things up, to write us things. Now we have over 1 million paid users of ChatGPT for businesses. It's really starting to take off now. The 1 million figure includes people who have signed up to use ChatGPT Team, enterprises, and education services. ChatGPT Enterprises was introduced last August as the Sam Altman-led company looks to boost revenue from the larger companies. ChatGPT team, designed for smaller businesses, was introduced in January. Separately, on Thursday, the information reported that OpenAI has discussed higher price subscriptions, perhaps as much as $2,000 per month for its upcoming large language models, including Strawberry and new model known as Orion. I looked a little bit into Strawberry, and I think I'm saying Orion, right? I know Strawberry has had some crazy things. So I think there's a law that just recently came out, and it says that basically if you release a new piece of AI, you need to basically get it backed by the government. Like the government has to look at your program before you're even allowed to like unleash this to the internet. I don't know. I don't know exactly, but Strawberry was the first one to do that. Was the first one. Orion. Thank you very much, Predator. I knew you were here, brother. I knew you'd help me out. So Strawberry actually posted this to the government to get them to okay it, and so he could release it. So it's kind of a big news there. So I use ChatGPT every day, guys. I do. It's the new Google for me. I love it, and I can't get enough of it. There's so many things it can help you with. It can help you if you're having a hard day. It can help you if you're having a hard math problem. If you don't know how to do the math problem, it will teach you how to do the math problem. I mean, it's absolutely amazing, and I absolutely love everything about ChatGPT and where AI is going. Predator says in Greek mythology, Orion was a giant huntsman whom Zeus, or perhaps Archimedes, placed among the stars as the constellation of Orion. So Orion's belt. Perfect. It's probably the only constellation I can point out in the night sky. But yeah. So let's go ahead and take a little peeky gander really quick of the sectors, because we want to make sure that we keep up on the sectors. And then if you guys have any tickers, I want you to put them in the chat now. If not, forever hold your peace, because once I get through the sectors here, I'm going to say my goodbyes. So make sure if you have a ticker that you want me to take a little peeky gander at, or if there's anything that you want to bring up, throw that in the chat now. I'm going to run through the sectors. So we have XLB above a 50-day moving average. That is your materials. XLK, which of course is your technology, riding a 200-day moving average, not looking too good. XLE, this is your energy, below all moving averages, not looking good at all. XOP, this is gas and exploration. This is not looking good at all. We have XLC still trying to hold on to that 50-day moving average. It really is trying to hold on there, but it's not looking very good. It's still uptrending, and on its uptrend, excuse me, guys, I had a long day at work. If we look at this uptrend, it almost looks like it's breaking this uptrend. We can finagle, we can finesse this, but really it's that 200-day moving average that's trying to hold this thing up. So if it breaks through this area, that's where I'll get concerned. It's $84. If it starts breaking through this area, I'll start to be concerned, but communications is still looking okay. It's XLU that is still outperforming everything right now. It's still above its 10-day moving average. It's still looking very crispy, juicy, plumped, savory, spicy, all those pizzazz words right there for you, coming into your sweet ears. We have XLP. This is the consumer staples, still holding up above a 10-day very, very well. So XLU, utilities, consumer staples, XLP looking very good. XLV took a major hit today. Still well above its 50-day moving average, though, so it's still in a considerable hot sector. XLI also took a hit today, but still above a 50-day moving average. And XLY, as Dan Bob pointed out to me earlier, did really well, which is kind of funny because it's consumers discretionary. Usually in a market like this, you won't see consumer discretionary pulling ahead of the rest of the market. It is still above all moving averages. So technically, this is still a good play. And I really think because of Tesla's pop in the market, that's what really brought this up, because I think Tesla is a big advocate of these consumer discretionaries. XBI, I could be wrong on that, guys. I could be wrong on that. XBI, which is biotech, still trying to hold on to this 50-day moving average, so still looking okay. And let's look at XLF and XLR. So XLF still holding a 10-day moving average, but also took a major hit today. And of course, your XLRE, which is real estate, it looks like that there is also well above its 10-day moving average. So still holding out very well. XLU, utilities, consumer staples, healthcare, and of course, our real estate. Some honorable mentions. Hack is still trying to hold its 50-day moving average. Let's see, the regional banking still trying to hold its 21. Looks like Yosef says line, L-I-N-E. Let's take a little peeky gander at this. So this is the real estate investing. So we know that real estate's doing well. Line or Lineage Incorporated, it only moves 2.92%, and that's a more recent IPO. I think if it can hold these lows at 80 and start to show new higher lows, we might be able to see something like that, you know, if it starts to form something here. But I don't see a clear base. You know, I'd much rather see it hold something like this right here. Oh, excuse me. But it didn't hold that. So it's kind of breaking down now. I think this needs more time, but it's a slow mover anyway. Give this thing some time, Yosef. But we'll see. We'll see what happens with it. Oh, is a ticker? All right. Oh, this is another reality stock. So this moves really, really slow as well. Reality Income Corporation. It only moves 1.27%, but you got your cup and your handle here, and then it ended up breaking out of this beautiful base. This is beautiful. This is a beautiful cup and handle, guys. If you can't see this, let me just put this in a better spot. See this nice cup right here, and then it comes up to that same area of its curvature, and then it trades sideways and then breaks up higher on the 10-day. That's beautiful. That is beautiful. That's a beautiful cup and handle. It even creates this beautiful $60 base. Well, technically it's $60.98, so $61 base breakout right here. Very, very nice. It looks like it's had a little pullback today, but if it can hold that 10-day, continue higher, you might have yourself a crispy, tasty, yummy little run to the north side. NRIX. Let's take a little peeky gander. Wow, I drew a lot of anchored VWAP lines off of this damn thing. Look at this. I was really messing with this earlier. Oh, wow, that looks really good. Okay, so I really like this stock, Dan Bob. Nice pick on this right here. So this is our trend base break. Okay, see this rising 10-day moving average? It's getting really tight on it. So it broke up on higher volume down here, right? Then we had a sell-off. We could call this a undercut and rally, and it rallies back up. Now it's pulling back. It's getting really tight on a 10-day moving average. I'd like to see one more inside day. Just stay above this, right? Stay above this. Get really tight here tomorrow, and then break out the next day. That would be really nice to see. Nice tight inside day. But yeah, NRIX looks good. I'm just going to go ahead and mark my alert. Why do we set alerts? Because alerts are free, baby. Alerts are free. Oh, that was a Stewie find? Hell yeah, Beef Stewie, my boy. I don't see him in here tonight. I hope he's okay. I'm going to have to reach out. I'm going to reach out to him right now, actually. I know a lot of us are starting to get sick and stuff like that. So, you know, my thoughts go out to you guys. I want everybody to be happy, healthy, and safe out there. So make sure you're taking good care of yourself and your family, of course. And I totally forgot. I just messaged Beef Stewie to ask if everything was good with him. Asked him how he was feeling. So I hope he's doing well. I know yesterday I wasn't feeling too well. Dan Bob today wasn't feeling too well. So it's going around, guys. Definitely protect yourself. Be careful out there. Maybe Eli Lilly, aside from a weight loss drug, will come out with a cure-all. I'm only kidding, guys. But hey, I want to say thank you very much. Not a huge turnout tonight, but what I love about this turnout is it is the finest people. If you guys are still here and you're willing to learn and you know that I'm hands off, that's a beautiful thing, guys. S&P 500, we pulled back. We're below a 21-day moving average. The last time we were here, everything started to die out. A lot of people weren't getting excited. People were like, oh, Well, if there's nothing to trade and you're not going to give trade, if you're not going to give me tickers to play, then I don't want to be a part of it. And it's really sad to hear that, because the best time, honestly, guys, is right now. Okay? When we're pulling back and there's there's things in the market that are very concerning. This is the best time in the market, right? Because now we can see and understand where our key areas are when we pull back. We can start to see new higher lows. We can start to get above a 21-day moving average, start to be risk on, find those stocks that are relatively strong compared to the S&P 500 that move faster than 4 or 5% on an average daily range. And then we can put our money to work using risk management. Bada bing, bada boom. You'll be making money soon, okay? So thank you so much for being with me here, guys, tonight. I appreciate each and every one of you. And, of course, we'll see you in the Discord. We'll see you in the Facebook group. And right here, take a little peeky gander. I haven't asked you all night. I'm worried. I'm worried now. Let me refresh this. We have 11 likes. Beautiful. If you're watching this at a later time, hit that subscribe button, and you guys already know what to do. Click on more. Go down to the link tree. Click on that link tree. We got our Facebook right here. Go to that Facebook. Over 200 people in such a short amount of time. You have the greatest moderators over there, including myself. We have Dan, Bob, and Sweet Jolene taking care of that Facebook group. So if you guys want to be a part of a swing trading group, Facebook group, that is absolutely amazing. Not one scammer has came through there just yet. We're still waiting for them. We keep most of them out. If one gets in, they're out very, very quickly. So check out that Facebook. Of course, check out the YouTube. And if you want to join us and you're not in this already, you're going to have an open mind and heart of gold, and you can join this Discord for absolutely free. Of course, I use TradingView. If you click on TradingView, you'll get $15 off if you decide to upgrade to the Essential plan. If not, click this link anyway. It's absolutely free to download this. Then we have Instagram, TikTok, and of course, X, also known as Twitter. I hope you guys have an awesome night. Thank you so much for being here. And if you want to hang out for just an extra second, I'll give each and every one of you a goodbye shout out. Peace. All right, guys. Thank you so much for being here. Jimmy, I appreciate you. You're always here, Jimmy. You are very dedicated, brother. I appreciate you. I promise you. I know who the OGs are. I know the people that are constantly in here, constantly supporting me. The second we get merch, the second we start getting merchandise in here, I promise you, there's quite a few of you out there that's going to get that free merch, because you know damn well you deserve it. And I want to show my appreciation. So once we start actually getting merch, I don't know if it's going to be tomorrow or next year, but when we do, I promise you, you OGs are going to be the first to get it. We just ended the poll. The poll was, let it load. Let her load. Well, it looks like it's not going to load. Oh, there it is. The market, correction or recession. 69% say we're just in a correction. 23% say a recession. And Dan Bob says he likes turtles. Yosef, I hope you have a good night, brother. Thank you so much for being here. Appreciate you guys are the OGs. Erica, if you're still with us, I know you're watching on 2 screens right now. I appreciate you. Thank you so much. Predator, thank you for correcting me. It is Orion, like Orion's belt. And I appreciate you giving that little piece of history in there about Zeus and Orion. Of course, Zamora and Robert Tanch. I really appreciate you guys, or Tanch. I'm so sorry, dude. I appreciate you guys being here, man. You guys are awesome. You guys are the real ones. Thank you guys so much for being here. Yoshi, what's going on, Yoshi? Or Joshi. Congrats on your wins, brother. I love seeing that you're in there winning, brother. I hope you guys have a great night. And yeah, we'll talk to you guys very, very soon. Peace.